Welcome to you. And here we are back in Yvonne's kitchen. This is Yvonne Jenkins from pinkinvestments.org. And today we're going to be talking about lump sums. It's been great to hear from you with lots of different comments. And the questions that we get often include, what do I do with a lump sum? And this is from a variety of places, isn't it, Yvonne? It could be from you've inherited a lump sum from a parent who's died, or even from the insurance from a partner who's died. You may have been a great saver and here you are with a sum. You could have even come lucky on the premium bonds. Wouldn't that be great? But there's a lot of feelings connected with what do I do with this? And actually, one of the things that Pink Investments finds really important is to acknowledge how our emotions, how our feelings impact on what we do with money or what we don't do with money and so on. And so I'm going to guide you there, more interestingly, into the mind, body, spirit section of Pink Investments, and you can read more about it there. But I think there's a feelings of a lot of responsibility with what do I do with this amount of money, or even guilt. Or maybe you are in a place of grief. Maybe you're not in a place to deal with this amount that is suddenly on your doorstep. And there could be pressure from family or friends. And I guess one of the choices you could have there is to put it into a high interest account for 6 months. Give yourself a little rest there while you deal with the sort of emotional pressures on you, and let yourself go through those feelings and then return to it. And actually, then what you're returning to is, I've still got this lump sum. And this is where Yvonne's coming in, because she's going to give us some really useful information about what we can do with this.
Yeah, I mean, all what you've just said, Ruth, is absolutely right. And certainly myself, when I've dealt with clients in the past that have been in the situation where they've just inherited a lump sum of money from their parents' estate, or a partner has died and they've got an insurance payout, then in those circumstances, almost without fault, I will say to them, do absolutely nothing for 6 months, just bung it into something with paying a higher interest rate, and allow yourself the time to grieve, and come back and look at this again, in 6 months' time, when some of it's not quite so raw, there's not the pressure on you from family members, peers, whoever it might be, or the bank manager to do something with it. So I think you're absolutely right with that. Today, really, what I wanted to deal with, because we've had a lot of feedback, as you've said, through the website, is just some real sort of basics about investing. Because the minute we actually use the terminology investing, a lot of women suddenly recoil or run for the hills and think, oh, savings, okay, I'm good at savings. But doing this sort of crossing the threshold between savings and investing, there really seems to be quite a bit of a mental block there very often. And a lot of that really, again, is with a lot of other things in the financial services arena. It's to do with demystifying, taking away jargon. If you read a lot of literature from the banks, building societies, unit trust groups, you keep coming across these terminologies all the time: risk and reward, volatility, diversification, all that sort of thing. And, you've really got to break down that jargon and get to the basics. And so we'll start to do that today. And half of the problem really is, again, like a lot of other things, knowing the questions to ask of yourself, but also of any advisor that you're actually going to go to get advice about a lump sum investment. So I'm sure a lot of you have picked up literature from banks and building societies over the years. And you might well have read that really the key to successful investing is to manage risk and have diversification. But what does that actually mean?
What is risk? What does that mean?
Okay, well, breaking these things down into laywoman's terms, if you like, is diversification simply is just having a mixture of different assets, and assets are just different types of investments. So when they say have diversification in your portfolio, they simply will mean things like have a bit of cash in there, have some government bonds in there, maybe have some unit trusts in there. If you're of the mind where you don't mind having a little bit of volatility in your portfolio, then you can also have some shares in there.
I'm going to have you come back to that volatility, but I think what you're saying is, not eggs in one basket, spreading it out so that, if one of them's not doing so well, that's actually all right because you've got 4 other things that are actually very solid.
It's as simple as that.
Okay.
It's as simple as that. And so there you've already, demystified a whole load of jargon there in one fell swoop,
Tell me about volatility, though. So you did that. I know volatile people. I tend to stay away from volatile people, as my daughter would tell you. But what does it mean in money world?
All right. Well, as you've just said, volatile people. So sometimes, they're up, sometimes they're down. You're not quite sure what the mood's going to be. Well, the stock market is a bit like that, really. Mm-hmm. So when you get into things like share investing, you have to factor in or bring into the equation the fact that shares don't go up in a straight line. Over a long period of time, historically, they have tended to sort of start here and end up here. But in between times, you've got volatility. So up, downs, up, downs, up, downs. So volatility means the same thing.
I think there's a whole lot more videos we're going to do about shares, about the world of shares, about how you can possibly choose, where you choose and why you would choose to buy particular shares above others. So we're going to come back to all that.
We'll go back to all of that, but I think really in the more sort of basic fundamental side of it, you can quickly really get a grasp, a good basic understanding of investing principles. And so in the next video, I'd like to actually have a look quite specifically at what I call my investing risk pyramid. And that then just goes through one by one all those different type of asset classes that we just mentioned now, so cash and fixed interest and so on, and builds one upon the other as to what risk levels they're at. So, for example, if you're somebody that really doesn't like any risk in your life whatsoever, you're probably a cash investor. On the other hand, if you're someone that likes a bit of spice in your life, happy to have maybe part of your investment, a small part of your investment, exposed to some more risky things with the potential to get a much better return on your money, then you'll probably be quite happy to have some shares in your portfolio. But I think literally going through those asset classes, it is a key thing to understanding and knowing what questions to ask of an advisor or bank manager or whatever. So I think we would actually devote a whole video to that.
So look out for our next video. What's it going to be called?
Investment risk pyramid.
Investment risk pyramid. So this is for all of you in that lucky position in some ways who've got this lump sum for whatever reason, and actually for all sorts of reasons. You may have put it away for 6 months just to give yourself a bit of time to work out what to do with it in one of those, as Yvonne says, a high interest account. Lock it away for 6 months and then get yourself ready to make your decisions about what you're going to do with it. And so we're going to be talking about that in our next video. And shall I just mention this, which is the ebook? Yeah. Can you see that? There you go. This is, you can look up this ebook, and what is it called?
It's the one that you would want is the Investors Beginners ebook. It's totally free. You can download it. We've just simply printed this one off so that we can show you. But they're very comprehensive, and they have a very comprehensive section on the whole thing about risk and reward, diversification. So a lot of the things we've already talked about today, actually.
Okay, so we'll see you at the next video. See you then.